Hey guys, welcome to how to read and understand the trending market. And just to make sure we're all still on the same page, let's quickly go ahead and recap the things we've been through so far. At the beginning, we learned why most traders fail and how we can avoid those costly mistakes. Then we moved on to understanding the anatomy of a candlestick and what a candlestick is. After that, we took a look at what price action is and how markets and how price action actually moves. The three ways price action can move is either trending, like what we're going to talk about in today's video, consolidation, and reversals, and we can place three different types of trades based on those three market conditions. Now, for the remainder of this course, from where we are now until the end of the transition phase, we're only going to focus on trending markets because remember, the transition phase of this course is going to be the most important. This is the phase that is meant to take you from not being profitable to helping you become successful as a trader through the process of learning one simple strategy and building a trading plan around that strategy. The strategy we're going to learn is a trend continuation strategy, so that's why we're going to be taking a look at trending markets for the remainder of this course until the end of the transition phase. At that point, we'll take a look at reversals, consolidation, more advanced strategies, but for now, we're going to focus on just trending markets. So let's dive into how to read and understand the trending market. So we discussed a little bit about trending markets in the last video. We'll use a downtrend as an example now. Just to recap, a trending market is making new lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, so on and so forth on the way down. As long as this continues, as long as we continue to get lower highs and lower lows, lower high and lower low, lower low, as long as this situation continues and we continue to get lower highs and lower lows, we'll be classifying this market as being in a downtrend. The opposite applies for an uptrend. Now let's get into some more detail about that situation. We'll use a downtrend again as an example. If we have a market that's pushing down, pushes up, then pushes down and breaks below support, at this point, we can consider this market being in a downtrend. If this was our starting point up here. So there's our starting point. We have a push down, push back up to a lower high, and then a push down into a lower low. Now, as we discussed in the last video, we're gonna harp on that a little more in this video to make sure it's engraved in your brain. For a trending market, right here, this lower high is the level we're paying attention to. The reason we're paying attention to that is because we want to see a pullback out of this market, no matter what happens in between here. As long as this pullback does not break and close above this lower high that we have right here, as long as that pullback does not break above that, we still consider this market to be in a downtrend. So we could have a situation like this where the market pulls up and starts breaking resistance. And yes, I know that we discussed this being a reversal scenario in the last video, but as I said, we're not concentrating on that right now. So go ahead and dismiss that for now. What we're looking at is a trending market. And as long as we stay below this lower high and we don't get a break and close above it, then this market is considered to be still in trend and is more likely to break below the lower low here than it is to start heading higher. And that situation continues on the way down. Now that we're here, we would be looking at this as our lower high. It looks as though that's an equal high, but same difference. Is an equal high here. And as long as the market stays below that equal high and continues in trend, meaning as long as before we break and close above this with a candle, as long as before we do that, we break and close below this previously made support level before the pullback, then we're still in a downtrend. We're considering this market to be trending. And that's how we're going to be defining, and that's how you need to read and understand these trends, is the market's going to be pushing down and there may be a lot of noise in between here, right? There may be something that looks like this, and yes, this is a period of consolidation, but overall, as long as the market does not break this lower high and close above it, we're still in a downtrend. We're still more likely to head lower than to break up and go higher. Now, what's different about, what would be different if this market broke up and broke above this previous level of our lower high resistance? Well, if the market breaks above that, then we have a higher chance of this market continuing up than pushing down and breaking below our previous support. Now, I know I went a little fast for that. I'm hoping that after the last video, giving you guys an introduction to this type of understanding of trend that you're able to catch on to this pretty quickly. For anyone who had trouble with that because of how fast I went, just go ahead and rewind the video and rewatch that one more time. And I'm going to quickly draw out the same situation, the same kind of scenario for an uptrend to make sure we have a complete understanding of trending markets. Because again, guys, these are the foundational steps you have to take before understanding complicated or advanced strategies. You must, and I mean you must, completely master trends. I used this analogy in the last video as well, but having an understanding of a certain strategy without understanding the way the market moves, like we talked about in the last video, without understanding trends like we're talking about in this video, that's like building a house on an unstable foundation. No matter how fancy the house is, no matter if it's a 10,000 square foot, $1 million house, if it's built on an unstable foundation, that house will not last long. That house will fall when storms come, when the rain comes and washes the foundation directly out from under that house. Our trading is no different. Unless you have the foundation of understanding trends, understanding market structure, and everything we've been talking about in these past couple of videos, then your chances of success are dramatically lower. And that's the reason we're staying on this structure and trend identification so much here in the beginning of the course, is because it is an extremely important part of your trading. So let's continue. Let's do one example of bullish, and then we'll go down to the charts and we'll look at this on some real price action. So for bullish, we would look at higher highs, higher lows, higher highs, higher lows. Now, in this situation, we have our higher high here. The market just broke above. What level can the market not break and close below for us to still consider this in an uptrend? Hopefully you pointed out this level here. As long as the market stays above here, no matter what happens in between, as long as we stay above here, we are still considered to be in an uptrend. So let's say the market comes down and does something like this and consolidates in through here. No matter what, as long as we stay above this level and do not close below it, we're expecting this market to continue in trend and at least retest these highs. Now let's consider we do it again right here. Same scenario, we just broke above our previous level of resistance, meaning we're continuing this uptrend. And as long as this market stays above this previous level of support, the most previous level, the lowest level of support after the break above resistance here, as long as we stay above that, then we're considered to be in an uptrend and expecting trend continuation, expecting this market to at least retest, if not break, our previous resistance. So that's how we're going to be reading and understanding the trending market for the purpose of this course, for the purpose of our trading. This is how I've read market structure and trends for my entire trading career, and it has proven to be extremely reliable. So now let's head down to some actual price action, to some real charts, and apply this concept to candlestick charts. Okay guys, so here we are on the Aussie Canada 4-hour chart, and something I see a lot by educators is if they're trying to teach you how to spot a trending market, they'll find the best case scenario for a trending market where the market is only trending, it's not consolidating anywhere, and that's how they teach trending markets to some of their students. And I find that to be a bit counterproductive. See, this is what you're actually going to see in live markets. You're not going to always see a market that looks like it's perfectly trending up or perfectly trending down. More often than not, you're going to see situations like what you see on your chart now. So what we're going to do is go through this entire chart that you see on your screen, and we're also going to scroll to the right until the end of price action, and I'm going to be showing you guys how we would identify trending markets in this entire situation. So I'm going to grab my line tool here, and I'm going to go ahead and point out our major swing lows and highs. So here we have a swing high on the left hand side of my screen, pushing down to a swing low. Now this, I know for a fact, broke below a previous level of support. So knowing that, and there was a downtrend previously here, so knowing that, I know that this is a downtrend. If not, though, we could classify this as our starting point, and now considering we have a starting point, a move down, we have that push up, and then we have a break of structure putting us into a downtrend by the break and close below that. Now look what the market does. Instead of continuing in that downtrend, what do we get? We get a reversal, and this will happen from time to time, guys. It's not a 100% accurate thing. It's just that this gives us a higher percentage chance of winning trades by really understanding how to read market structure and market trends. So after creating this downtrend, the market pushes up to a new high, and we don't break and close above this previous high until right here. So that's how we would look at this. Let's bring on our pencil. Here we have a previous resistance level. That's our previous resistance, and we have our previous support. What were we looking for? If we were going to see trend continuation, we would want to see this market come up and break down into trend continuation before breaking and closing above this previous level of structure. What actually happened? Well, what actually happened is before breaking below our previous level of structure support and continuing in trend, we got a close above our previous level of structure resistance here, telling us that this could be a possible reversal. The market could possibly be heading higher. Then what? Then we get this pullback and a break of structure. 1, 2, 3 move. This is our reversal scenario. We would now be looking for possible long trades pulling in to previous structure. And again, that's not really something we're going to be discussing until the advanced section of the course, but just to keep you familiar with that term, I did want to point that out. But now we have a new higher high, putting us into an uptrend, right? Then what happens? If this is our most previous swing low right here, we push down and break below that swing low, putting us into a possible reversal situation. Well, this in here, guys, is consolidation. And the reason I'm pointing that out is because there's no trend while you're in this period of consolidation. So there's really nothing we can do while in consolidation based on reading and understand trending markets. Right here, we have a slight bias to the downside because we just broke below previous structure support, but we're not in any type of trend because of that as well, waiting on a breakout of this period of consolidation. We break out into new highs, then we continue in that uptrend, and then what happens? We break down. Now we're not in trend at all anymore because we just broke below this previous level of structure support. So let's scroll the chart to the right and see what else happens here on the Aussie Canada. Okay, so now we have this push up, break into structure resistance, looking for a possible uptrend to start. Remember, we're not in any type of trend. What we've had is a break of previous structure support, taking us out of trend, and then a break of previous structure resistance, taking us out of trend again. What we need to see for trending markets is what I classify as a 1, 2, 3 move. So if this was going to be a downtrend, I would need that break of support, a push up, and then another push down to classify that as a downtrend. If this was going to be an uptrend, I would need this push up, a pullback, and a push up to break above resistance, this 1, 2, 3 move we've talked about, to classify this as an uptrend. So since that did not happen, we're looking at a market that's not in trend, so that doesn't really give us any type of opportunity to trade if we're not in any type of trend. So scrolling sideways once more, we'll go ahead and move the chart all the way over, and you can see we're going to get in some good trending situations here in the Aussie Canada later on. So what we have here is a market that came up to this high, and we pushed down. What were we looking for? A break below our previous structure support level. Remember, we had this and then this. With that being our two major levels, we wanted to see a break below this level to put us into a downtrend or to put us into a possible downtrend. We need that 1, 2, 3 move. What do we get? 2, 3 break and close. So we have 1, 2 the pullback, 3 the break and close below. Now we are in a downtrend. So what are we expecting while in a downtrend? The market to continue in this downtrend as long as we don't break above and close above our previous resistance level. So there's our previous resistance level. This market pulls back, breaks into new structure lows, keeping us in this downtrend. Now we have this as our resistance level, about the same area. This was about an equal high. So we need the market to not break above this. We can't see it do that because that takes us out of the downtrend. But as long as the market stays below this level and then breaks into new lows, then we consider this to still be in a downtrend. And that's exactly what we get right here. We break into new lows. Now this is our swing high that we can't break above right here. So we're waiting on the market to break into new lows before getting to and closing above that level. We push up directly into previous structure support, then we push down once again. Now in this case, why don't you go ahead and see if you can point out what we're going to be looking for. Well, we're looking for the market to break into new lows before breaking above this level of possible resistance. So what we need to see is this market stop below that level and break and close into new lows, continuing this downtrend. So as you can see here, we have a great example of when the market's going to be in trend. You can really capture some good trend continuation out of a market when it's doing something like this. Then what do we need? So we're right here. What are we waiting to see? If the market does not come up and close above this level of resistance, then we are continuing this downtrend. As we break and close below once more right here, current price action. What are we waiting for? Let's go ahead and delete this and zoom in on this because this is a bit small. Probably what's getting a little difficult to see there. Sorry about that. But here, if we zoom in, you can see exactly what we're waiting on. We have this push down, previously, our push up that did not break and close above our previous resistance level, our push down that kept us in a downtrend because we broke below our previous support. Deleting this current price action, we just had this push down, meaning that this is our previous level of resistance. Until this market gets up to that resistance level and closes above it, unless we get a situation like that, then what we're expecting is trend continuation in this market to break into new lows. All we're waiting on is a specific entry reason in order to do that. And that's the importance of understanding trending markets, is now we have this condition met of the market being in trend. But we're not just trading based on that. We're not going to say the market's in a downtrend, so I'm going to short the market right here where it's at. We don't have a way to test that, to verify its profitability in the market. That's just way too random. The way we give ourselves an advantage is by saying, okay, the market's in a downtrend. Now we're going to look for a specific entry reason before going short. We have a specific place for our stop loss to be put and a specific target. And that's some things we're going to discuss more in the transition stage of this course whenever we dive into actually learning the pullback strategy. But that's going to do it for this video. Hopefully this gave you all you need to be able to understand how to read and identify market trends. If you have any trouble with this concept, then make sure that you go ahead and rewatch this video. And if you have questions still after watching this video multiple times, then feel free to shoot me an email at steven@thetradingchannel.net, and I'll be glad to get back to you as soon as possible. I hope this was helpful, and I look forward to seeing you guys in the next video.